Welcome to Abode with Afta, the podcast where we step inside real homes and uncover the stories behind the renovations. I'm your host and interior designer Ashley, and I'm speaking with homeowners and industry experts about what it really takes to transform a house. Amazing. So we'll move on as well, because I want to speak about financing for the commercial sector as well. So this covers, buy-to-lets, flips, commercial to residential. We'll touch on that because I'm doing something similar now, so I'll be able to get some help. So you're the one dealing with it day to day, so what's coming in and what's popular. I think it would be good to touch here on, the way the government's going, and is people still actually interested in doing it, because it seems to have boomed.
It has. Yeah, I mean, to be honest with you, I think anyone who's in the buy-to-let investment market's probably felt over the last 6-7 years they've had an absolute kick-in from the government in terms of things like additional dwelling supplement, or what's known as second home tax. It's been a place where people have lost things like mortgage interest relief, and landlords are looking at it and going, this is quite a hard way to make money, especially when the governments have changed the rules around letting the tenants have more power over properties too. So I think anyone who is a landlord, in my opinion now, is a definite landlord. We're losing what's known as the dinner party landlords, the people who maybe bought their first flat, who then kept it whenever they then bought their family home, and they just use that as we buy to let for the pension. They're gone now, or certainly should be speaking to an accountant and have an assessment on it, because they're getting taxed so highly on it. They own it in their personal names. And again, whenever they come to sell, they're going to be hit with things like capital gains tax now, which has increased the last few years too, with government changes too. So what we're seeing and have seen the last few years is a rise in what's classed as limited company portfolio. So that's where it's still a landlord, but what they're doing is they're setting up a limited company, which is really easy to do. I mean, you can set one up in 20 minutes online. You just get a limited company bank account. I would recommend using someone like Starling Bank.
Mine's is with Starling.
Brilliant, because you do it again 15-20 minutes. I've had recent experience of using high street lenders trying to set up limited company accounts for other businesses I've got, and the quickest one was 7 weeks from start to finish. That's a big high street bank, and the high street banks are going to lose so much to these new Monzo, Tide, Starlings, in my opinion, because these banks are able to do it in no time set up. So landlords are setting up through a limited company. A couple of different reasons for that. Very good tax reasons for it. They can put a spouse or partner onto it as well, and they can spread the income. The big thing for me is that you still get mortgage interest relief, and I'll explain what I mean by that. If, for example, you buy a property, and for a lot of people do interest-only mortgages to help with cash flow, but if you are getting £1,000 a month in terms of rental income, and your mortgage cost is £500, if that was in your own name, in the eyes of revenue, they would tax you in the full £1,000 a month.
Right, okay.
So you're paying tax on the turnover of it rather than what you're actually making on it. But in a limited company, you can actually write off the mortgage interest. So you can go, well, it's cost me £500 mortgage interest, so therefore the tax amount is £500. Okay. Now, also within a limited company, the taxation of it's different, because you get your corporation tax that you would pay on it, and you actually might not need to take the money out of the business. So therefore you pay 25% tax for corporation tax, rather than paying maybe 40% if you're a higher earning taxpayer. The other good things within limited company structure too is that some lenders will allow people to add their children on as shareholders. So children have got tax-free income as well.
Okay. Is that between certain ages, or like from birth?
From birth.
Right, okay.
Okay, so you can add them on as shareholders. You can't add them on as a director till they're 18, but you can certainly add them on as shareholders.
Yeah.
Not all limited company lenders do this, so that's where, again, it's good to speak to a broker to make sure you put them with the right one. But I've got clients that use that as ways of maybe paying school fees or school holidays. They'll go, well, the kids can take out their income that way. Right, tax-free out of the business, which is good, and utilising it there too. But the good thing with the limited company structure is, and again, we're seeing more and more people doing it, and again, there's more banks coming into it. If I'd been looking at limited company mortgages 5 years ago, it would have been banks like the Mortgage Works, Aldermore. Again, the Mortgage Works are part of Nationwide. They were the only high street bank that was in the game. But now we've got BM Solutions, which is part of Halifax, which is the UK's largest bank. They're now offering limited company mortgages. Coventry through their Godiva buy-to-let brand as well, again another high street bank. So we're seeing more competition coming in, which is a great thing, because it means that rates are getting better, criteria is getting better also, because some banks were quite fussy with what they took. other banks will go, well, actually, we'll look at this. So we're not able to get lenders in without having any, certainly landlords in without having to have any minimum income. There's banks that are in there where if we came here 5 years ago, they had to earn a minimum maybe £25,000 or £40,000 to even get a buy-to-let mortgage. So that's a really good structure, because we could have a client who maybe has a non-earning spouse.
Yep.
And we're able to use a limited company structure in their name with a bank that doesn't have any income requirements, and then they can start buying properties and taking the income out in a really tax efficient way to help them with realising their property dreams as well.
Yeah.
So limited company structures we've seen just skyrocket with it, because people aren't coming to us anymore and going, I want to buy a buy-to-let.
Yeah.
Because it's not worth it by the time you pay your taxes.
People are coming saying, I want to start a business and a property letting
business, a portfolio, a lot of portfolio properties, and want 3, 5, 10, to be able to do it, because it's a long-term thing now. It's like, I want to do it. We try and get people into repayment mortgages right from day one if they're able to do it, because it means, because there's banks out there like the Mortgage Works, for example, who I've just mentioned, they will give someone a 35-year mortgage so long as they apply before their 70th birthday. So we can get someone a mortgage right up to 100, 105 years old. So we've got clients who, under the Pension Freedom Act as well, who will be able to take money out of their pension when they're 65, 66, who are going, right, how am I going to supplement my retirement income? I've got a pension, but I've got a tax-free amount of money. What I'm going to do is I'm going to buy maybe 2 or 3 buy-to-lets through a limited company, and we're able to get the mortgages right until they're 100, 105.
Yeah.
But there's also a really good thing that you get with a limited company structure that you don't get with buying buy-to-lets in your own name as well, and that's succession planning, especially with kids.
Right, okay.
Because see, whenever the kids are 18 and you've got them in a limited company, you can add them on as directors.
So what is succession planning?
Basically, you're creating generational wealth.
Right, okay.
Okay, so, days of old people, the super wealthy would have done it through the use of trusts, and you probably hear people talk about trust funds and things, and they would hold assets within a trust that would be there for their kids, basically.
Right,
so
okay.
whenever they pass away, it just gets handed down tax efficiently. If you have property in your own name and you pass away, that property's got to be sold.
Yeah.
Okay, so if you want your spouse to get it, the kids to get it, whenever they're a bit older, you've got to sell it to them.
Right, okay.
And that comes with second home tax.
Okay.
Also comes with capital gains tax as well. So all these different taxes and costs that people have to pay with owning property in their own name. But if it's held within a limited company, what happens whenever that person passes away? If the kids are directors of the property business, then that person just changed the directorship in the company's house.
Yeah, they're already just part of the business, like employees, basically.
Exactly. And then whenever they become old enough and they've maybe got a family of their own, they can add the kids onto it, then onto the property business and things like that too. So they get around their taxes and things to pay at the time. But it means that whenever someone passes away, just the structure of a company's house changes. Removal of names and adding on of names.
So maybe in 100, 150 years' time, we're going to see these property businesses established back in 2000 and they're still going.
Absolutely. Well, the thing is, it's like, it's a hierarchy of needs again. Everyone needs a house. Yeah, exactly. You need a roof over your head. And you're either buying it or you're renting it. Yeah. And right now people can't buy because property values are so high, but also we have so few property, or such a little amount of property that's actually available for people to buy. It's unbelievable. And for years and years and years, the government's blamed buy-to-let investors. Yep. They've gone, it's buy-to-let. Everyone's gotten buy-to-lets and everyone's renting. And they're so far from reality, it's unbelievable. What happened was there was a massive sell-off of ex-council properties under what was known as the Right to Buy scheme. The councils took the money, spent it on other projects and things rather than reinvesting it back into new housing. Social housing. So now we've got this massive shortfall. People are living longer. We've also got a lot of new people coming into the country as well who are needing housing too. So we're seeing the supply and demand just skyrocket. Out of control. And how do we fix it? Unless we're building new properties, we don't. So that's where I see property and buying property as a really good asset because it's something tangible, something you can touch. It's one of the very few assets that you can actually insure. So if you put your money into the stock market, you're at the mercy of this. Yep. You can't insure the asset. So if it all goes wrong, you've lost your money. Buyer beware. But with property, if a house goes on fire, I've got insurance that'll cover it. Yeah. If I put a tenant into the property and the tenant decides that they don't want to pay the rent anymore, I actually can take out an insurance plan that'll cover that.
Right, okay.
and cover the legal fees and the tribunal fees to take them through court to evict them as well.
Yeah.
I can pay for insurance to insure all of the asset, but more importantly, it's something that's bricks and mortar that I can go and touch and look after as well. So don't get me wrong, compared to having money in the stock market, for example, with property I do need to pay to upgrade it, I need to pay to maintain it, I need to get annual safety checks done and gas and electricity.
See that as well, like everybody says, oh, property's just easy way to make money, but you still need to look after it, or it's going to go down in value and it's never going to go up. And
absolutely,
like it does take a lot, putting your money in a stock, put it away, don't look at it and hope it goes up. But like with property, you do actually need to look after it.
There is. So yeah, the good thing with properties is that you get the sell-on aspect of it. So whenever you do decide to sell on, and if it's made you money, brilliant, right? You've made some money. Granted, you've got tax and stuff to pay on the back of it, but again, you're making a monthly income. Now, if you don't need the monthly income, you let that just build in your pot, and you can use that to get the next one, and so on, and start to build up portfolios that way as well. But from a long-term investment, property is fantastic because just purely people need housing, and always will do. We've seen rents increase. Sadly, on the back of mortgage rates increasing, and one of the things that really frustrated me was whenever the government decided to say landlords aren't allowed to increase rent. They put a rent cap on it a couple of years ago in Scotland, certainly, and I felt that very unfair for landlords because homeowners seen all their mortgage costs go up. Landlords seen their costs go up. But if you were
because they've got a
renting,
mortgage on the property.
But if you were private renting, the government says, oh no, you can't raise the rents. Like, well, hang on a minute. Because of government decisions, we've seen mortgage costs spike for everybody else.
But that just means that then the buyer, well, the person that rents out the house, they're just going to put less money back into it because they're not getting that pot build up for, let's say, the new roof every 20 years or windows. And
they'll just let it deteriorate and so on as well, which is what they shouldn't be doing, but there's no incentive really to do it otherwise. And again, with new regulations coming in for landlords around energy performance certificates and getting properties to be better conditioned and lower energy running costs, if landlords haven't got the equity or the capital in the property to do it because over the years they weren't able to increase rents, they're less likely to make that property more energy efficient because you just don't have it. And also coupled with getting taxed in various different ways, and that's why we've seen a lot of people sell. Are you finding, people are selling, because you hear about people wanting to just get rid of their portfolios, so are they coming to like yourself with, let's say 5+ houses and just saying, I just want out the game, or do they keep a couple, or? Do you know the ones that do that are the ones that have got the properties in their own name?
Right, okay.
I haven't seen anyone yet in personal experience who have their properties in a limited company going, I'm getting rid of my portfolio. So
see if somebody has a property in their own name, can they change it, put it into a company?
Yes is the answer. Would they want to? That's going to take a wee sit down with a tax advisor to see if it's worth it, because technically your limited company's got to purchase it from you.
Right, okay.
So you can't just transfer it over, so you've got to sale and purchase. Now, if you sell a property, you're going to be subject to potential capital gains tax if you've added value to it. You've also got solicitors' fees to sell it. You now need solicitors' fees to buy it through the limited company. You're
both parties.
And you'll also have the 8% second home tax as well.
Right, okay. So sometimes it's just better.
Yeah, so that's where it's working out and going, right, it's going to cost you X amount of money to sell. How many years is that? And it will be years before you recoup just the cost of doing that. So it's got to be a really sort of long-term decision if someone's going to do that. So
what if somebody was in that situation, they could sell that house just on the market and then they have their pot and then they would just buy a new one in the limited company? Is that work and do it that way? Just start fresh?
You're hitting with the exact same costs because you've still got to pay to sell, you've still got to pay to buy, you've still got capital gains tax on the disposal of the asset as well. So you're still hit with the same cost. The thing is, in the eyes of the revenue, you sell for market value. Which is, right now people are paying over market value to get a property. So if you are going to do it, it might be still cheaper to sell it at whatever the home report value is, rather than take the hit on selling maybe £15,000 or £20,000 over value. Pay a bit more tax on it. So, but I mean, there's more and more people now moving into this limited company structure with it too, and there's lots of really interesting mortgage products that's coming out of it as well, because landlords are now getting a bit more savvy, because there is a shortage of housing stock, good housing stock, so landlords are now having to create housing out of things that wouldn't typically be housing.
And you know as well, like there's obviously a trend here in the types of houses that landlords buy. It's the ones that aren't livable, and they're making them livable. So there's not really an issue with that. You know, you're making more houses become available to
exactly
people.
and the thing is, you're wanting to go into and you need to make a property better. So for example, there's a really good product out there, actually a couple of banks doing, it's known as a bridge to let, and that's where people are able to buy properties that maybe wouldn't be normally mortgageable cheaper, and the bank, rather than the person having to go and get a separate bridging loan, they'll get it all tied in within one product. So they'll be able to go, and the bank will go, right, we'll bridge it for you. Now bridging finance does cost a bit more money than a normal mortgage rate, but what they'll do is you'll go out and along with the value give what's known as a statement of works and go, right, I'm going to put a new kitchen in, I'm going to put a new bathroom in, I'm going to redo the roof, I'm going to replaster, we're going to do new carpets and flooring or whatever it might be, and that's going to cost me £30,000.
Yeah.
So I'm buying this property nice and cheap at 60. I'm going to spend 30, but at the end of it, the place is going to be worth 140k.
Yeah.
Right. So as part of the bridge to let mortgage, the bank would give you not just an offer for the bridge, but they give you the mortgage offer at the same time. So once you go out and if you fire through all the work really quickly, they'll just move you straight onto the mortgage. Once the surveyor's been out and gone, yeah, you've done everything you've told us you would. We're happy with that. We'll move you off the expensive bridge straight onto the mortgage.
Yeah. So see with that bridging loan, going back to like with the homeowner trying to renovate and they were told to bring maybe like the builder's quotes and things, would you do that for a bridging loan as well? If you're buying it for that price and then you're like, yeah, but so you know how much you should take, obviously if it's more expensive.
Sometimes some banks just want the statement of works, and that's because it's buy-to-let rather than residential. See, a buy-to-let mortgage is unregulated, whereas a residential mortgage is regulated and there's a lot more consumer protection around it. But whenever it comes to buy-to-let, it's generally seen as investor beware. And the person is buying the property cheap. They're normally having to put down 25-30% off it, so the banks have got that much bigger headroom there for risk. So if it does go wrong, they're less likely to lose a lot of money on it. So that's where these bridging products, with the ability to convert it to a buy-to-let mortgage on completion, are starting to become really popular, because again it goes back to that, everyone wants the brand new or the nice and shiny property, but the one that needs the kitchen and bathroom and stuff like that, or it's tired, or it's maybe been fire damaged, or there's had a flood in it or something like that. They're not likely to look at that, and that can sit in the market or maybe be bought at auction. You know, because we're seeing auction properties are still available.
Auctions all the time.
A big thing with that, with auction properties, there's a reason why they're on an auction site, and generally it's because they struggle to get a mortgage. So if someone is going to go to an auction and look at a property, definitely get a survey done up front. It will cost them a couple £100 from someone like Shepherd's or DM Hall to go out and actually get the property valued. But more importantly, is the property mortgageable? Because we've had clients before, despite being told not to, they'll go to an auction, then they'll phone up and say, right, I bought a house at auction. They've paid their 10% non-refundable deposit. They've got to sign the missives after 4 weeks, and if they don't, then they'll lose the property, and they go, right, now get me a mortgage. Hang on, we don't even know if we can get you a mortgage on the property. You might be fine as a client, but that property might be completely unacceptable to the lender. So, and if they've not done the figures and maybe can't get them a mortgage on the property, then they need to go down the bridging route. Now, bridging finance is expensive. It is short term, so if anyone's going to be lending someone money short term, they're going to want to make sure they're going to make a bit of cash out of it.
And they've got people ready to get in and do the work as well.
So you know what like trying to get a tradesman can be like, right? So if you're buying a property and going, right, I'm on this really expensive bridging deal because I didn't do my research up front, I jumped in at an auction without knowing what I was doing, I now need to get this turned around really quickly. I need to project manage it myself because the finance has now cost me so much money that I can't afford just an all trades guy to go out and do it. I need to now get a plumber. The guy comes out, does this. I can't do it anymore.
And if it's in that condition as well, you probably need another specialist first. You know,
you could get
like
timber and damp specialist out to do some works on it as well. You know, so you've got to be able to get that property into a mortgageable state to be able to refinance. But there's a kicker to that. Because most mortgage lenders, you need to have a minimum of 6 months ownership before they put a mortgage on it.
So you'd technically be on that bridging for
6 months minimum. Now there are a few banks that will do it without looking for 6 months, but there are very few.
Mm-hmm.
And you're at the mercy of their interest rates. So you might go, well, I've done my research and getting a nice low rate at this, but because I want to refinance it and I need to refinance it after 3 months, I'm now faced with going into a 2 or 5 year fixed rate at a much higher interest rate on the back of it.
So I suppose that comes from just the research that you do, in terms of it's the price that you buy the property for. Mm-hmm. Because you can probably work out what your interest rate's going to be, mm-hmm. and if you add that, and then let's say you bought it for like 40k, like really cheap, because it was that's probably why it's so cheap though, because you're going to then need to finance the rest, and you could just break even with buying a house that just needs a kitchen bath. But you're having to do 3 times as much work. Exactly.
And that's a key thing as well, because there is a minimum value for buy-to-lets in order to get mortgages, and that's 50,000.
Yep.
And that's why people are seeing properties sub 50k sitting on the market for longer that need work, because they can't just go and get a normal mortgage on it.
Yeah.
But if that property has the ability to be turned into 70, 80, 90,000 pounds with maybe just fitting a kitchen into it, because you can put a kitchen in for a couple of £1,000 if you know what you're doing, so... albeit it's cheap and cheerful, but in that value property, you just want cheap and cheerful, then that's where you are having to bridge it and look at other ways of funding it to get the initial purchase. Also, sub £40,000 properties, you're not subject to second home tax.
Yep.
So that again is why they can be quite attractive, because you can buy something that maybe 35,000.
Okay.
You're avoiding paying 8% to buy the thing in the first place, and if you can get the value at maybe 60,000 at the tail end of it, with maybe just spending a wee bit of money on it, that's actually a good way of people getting started to build a portfolio.
So that's kind of similar to like the property that I'm working on now, which is my own, but I don't know if the second home tax would have applied because I bought it as commercial. Mm-hmm. So this is a commercial property that I'm working on, and it's basically it's set up just now with 2 rooms. It used to be used as like a women's refuge, I think. Mm-hmm. But it's in a tenement flat block, so when it was originally built, I think it would have been built as residential. So right now we've just had planning accepted to change it back into commercial to residential, which I think goes back to we are generating housing. Why would you say no to that? And it will look a lot better than it does right now. It's just empty. But basically the plan for that place is we are going to put 2 bedrooms in it, so that's going to increase the value already. But because I bought it commercial under 40, I don't know if there was a second home. You
would just have maybe potentially some other taxes, but not an additional dwelling, because technically it's not a dwelling as such. Yeah. So, and this is a good thing as well about creating housing. So
it's like a loophole maybe that we found.
And it's something we need more landlords to start looking at. So if you can, I was going to say think back, because none of us were about 100 and odd years ago in the Victorian times, but it was an industrial revolution. And through the Industrial Revolution, they moved a lot of these properties, which would have been residential, and converted them into shops and so on. As well, because they wanted the high streets.
Yes.
So if you now look across the whole of the UK, high streets in most towns are dying off.
Yep.
And there are these empty units that are getting left at the same time where there's not enough housing stock available for people to be able to rent from or even buy. So I've seen a few landlords who are going down the route of buying commercial properties and doing the conversion work into residential. So it can be quite time intensive, because obviously they've got to get planning, building warrants, and the actual work.
Underestimated the time it would take, because we had to put all these planning in place first and then building warrant in place before actually, and being more creative, because like you said, the rooms aren't there for you to work with. You are doing empty shell to housing. Absolutely.
And I'd say, because I've known you for a while, I'd say you're an experienced person when it comes to property, because you've had buy-to-lets and things in the past, so you know what it's like. So, and especially with your line of work, you'll understand planning and getting warrants.
You know why I picked it. Because I was like, oh, this is great.
Project.
Project. So. But I still underestimated, the time scale for it.
And that's where, would a first-time landlord buy something? I would probably say no. I would avoid that. I would go for a straightforward something you can move into with maybe a little work and minimal fuss and get used to it first of all, because whenever you are taking on projects like that, and they are projects, and planning's such a big thing, they need to ease up on planning, in my opinion, to try and make it better for people to try and do this, because gone are the days of people using the high street for retail. Kilmarnock, Irvine, Ayr, you know, even Glasgow now, there's so many to let and for sale signs up, you know, on these buildings. And they could be quite easily converted into ground floor flats, you know, and creating new housing stock.
And it's not really out of place either, because above it is a residential flat. So you're in a residential area anyway.
And the thing is, what you said was it would have been residential at one point.
Yeah.
And it was due to the Industrial Revolution, probably, that things then changed and someone then decided to create a shop and a business out of it. And they applied for planning, probably much easier to do it back then, you know, to turn that into a high street shop. So, but the thing is, especially with tenements and sandstone, size is brilliant.
Yep.
And that's where you're able to go and look at it and go, well, actually, with a wee bit of planning and bits and pieces, you've got front and back. It's the same as loads of other flats. You've got front windows, back windows if need be. And then, you know, well, how many bedrooms can I get into this? You know, natural light's obviously quite a big thing for how people want it. You know, is there ways of creating natural light? And there are all these weird and wonderful ways of creating natural light.
So on the one that we've got, it's got the big bay shop windows, which are amazing. And that's why I was like, you know, this is going to be the nicest bedroom ever. Like, look at the window they're going to get.
Yeah.
And we're actually able to get, so we've done the floor plans around where the windows already are, because ideally I do not want to be changing the exterior look. We didn't put any that we were going to do that in planning, so we're not. But we're going to try and work with what's already there. So the constraint has just been positioning rooms where windows already are, because obviously you need a window in every room that's going to be a usable space. But again, we've got away with open plan kitchen living area for one window. The bedrooms all have their window, and then there's a bathroom. But I mean, we're getting 2 bedrooms in that, so taking this from a very run-down commercial ground floor property that we got, you know, at a great price, and the goal here is to, one, make it livable again, but to increase the value and put 2 bedrooms in. And this process of commercial to residential, which I think is going to, you know, it's a kind of win-win if you know and have a bit of experience on how to do it.
Well, commercial property is cheap. You know, it's a lot cheaper buying that sort of, because if that was a residential property, the footprint alone, you see the value being increased quite a lot too. But again, from your point of view, you know, from what's cost you in terms of acquiring the property, all the planning, the renovation costs and things like that, it's a great project. But if you hold on to that and you can rent that then as a 2-bedroom property, you know, that's a great thing, because inflation is a property investor's friend.
Yes.
You know, that's the thing. There's very few things where inflation's not good for, but whenever you own property, it's brilliant, because it'll increase the value of your asset. But also, more importantly, if you're borrowing money against it, if you borrow, for example, £40,000 against that down the line to get some of your costs and stuff back out of it, in 10 years' time with inflation, that £40,000 is maybe devalued now to be the equivalent of £35,000 or less. So over time, these debts seem less and less money as you're starting to pay it all off, because inflation's working for you. It's the same whenever I look at things compared to like sort of 10 years ago when the average house price was 180,000. You know, I think, well, that's grand, and people having, you know, I thought £1,000 a month mortgage payment 10 years ago, I thought that's quite a lot of money to spend on a mortgage. Now, anyone coming to buy a property, a nice family home, £1,000 a month is absolutely normal.
Mad.
You know, it's crazy. You know, but that's just because inflation and things like that over the years as well, and how house values have went. So if you've been buying property 10 years ago, you'd be, you know, going, well, hang on, my properties went from here to here. My debt, albeit at the time, was a lot. Now looking back on it, actually, because inflation has eroded it away, it's actually not that bad. You know, so that's how you make money on it. And then you sell a property maybe on your portfolio to pay off all the debt and all the other ones, because all the values have risen up enough. So it can be good strategies for buy-to-let. That's
what we are kind of, well, I'm working out now, is I think I'm just trying to get the actual building warrant submitted and get the work started now. But the end goal of it, like, ideally I would like to keep it and just have it as a buy-to-let. I think because even though it's such a small footprint and it's such a small house, it needs so much more done to it than just a kitchen bathroom flip, which is actually why I picked it, because I do kitchens and bathrooms anyway as part of my work. So I didn't really want to just do another one. I wanted something a bit more creativity and flair to it. So yeah, I think I do plan to keep it as a buy-to-let, but I suppose then the process is, once it's done, get it revalued at its new price.
Absolutely.
And it'll be residential as well. And then there'll be a decision there if, you know, keep money in it or take it out and do another, I suppose.
Yeah, absolutely.
Yeah.
So I again, it all depends on the rental money, what you can get, because then that's effectively a flip on the property. And the flipping properties.
Because the work's not been done yet, it's hard to gauge what it'll, you know, get for rental or selling it as something that, like, you can kind of work it out based on size and 2-bed ground floor, but in area, but you know, it still needs to happen until it's valued. You just don't. Absolutely. You can't decide. Numbers
need to work and make sure that you can get what you need if you are going to sell it as well. So again, that's another thing with a lot of property investors is flipping properties. So it's buying things, doing them up and then selling them on. And there's a wee word of caution with that for anyone that's looking to do it, because if people are buying it, doing them up, you've got this 6-month rule.
Yeah, that's what I was going to say. So you need to... We hear about people that live in them for the 6 months as they renovate, or they just buy them and...
Yeah, there's a very, I don't want to say grey area. I think that Revenue sort of found out about that, and they'll probably be pretty black and white about it. But there's clients who do buy property who, as their main residence, fix them up and then sell them down the line. Then they do their next project and they make the money that way, which is fine to do. But if you're buying and selling mortgages all the time, short term, the lenders will click onto that, you know, and go, well, hang on a minute, you know, you're effectively... Mortgages are designed to be long term.
Yeah.
They're not designed to be paid off in 6 months to a year and then the person keeps going back. And that's where bridging finance is really designed for. It's the right type of funding for it. But there's nothing wrong with someone maybe doing that once or twice. But certainly if someone's buying properties as an investor with the intention of doing them up, it's great going in all excited, blitzing it all in 2-3 weeks. Can you sell that property? Very difficult to, because you've not had it for 6 months.
Yeah.
And the 6 month thing for a lot of, so your buyer, and again, there are a couple of banks that'll do ignoring the 6 month rule. Virgin Money, for example, will do it, but Virgin Money will do it on the original purchase price, not what the person is valued at. Santander are quite good, they'll do it the new valuation. So there are a couple of banks that we can go to for someone who is buying a property off an investor who's deciding to flip it within the 6 months. But you're relying on that person, that seller, getting a mortgage with that 1 or 2 lenders. And they might not want to. They might want to use Halifax or Barclays or whoever it is the bank with. You know, maybe give them a better deal. And the problem is there's a lot of estate agents don't understand the 6 month rule. And they'll take a house on the market after investors maybe had it 2 months and done it all up and go, yeah, we'll sell it for you. And then whenever the buyer comes along, tries to get a mortgage and finds out they're getting knocked back everywhere for it because the seller hasn't owned it for 6 months.
So that affects the buyer as well?
It does, yeah, because the buyer can't get funding on it until the person's owned it for 6 months.
Yeah.
So it can be a real headache actually trying to get funding for it, because again, for us as a broker, we're going, well, yes, we can look at a lender that can do it, but are you going to pass a credit score with Santander? Are they going to give you enough money? Are you happy with the interest rate that they're giving you? Because you might get a cheaper rate with another lender at the time too. So you're really restricting down your potential sale. And if you're buying something to flip and invest in my opinion, you should be trying to get it to the widest market you possibly can. Yeah. Because the wider the market, the more potential buyers are out there. In theory, the more money I'm going to sell this for.
That's how you get the bidding war at the end.
Exactly. You want that closing date.
Yeah.
And you don't want people going out who do a wee bit of research and think, I'm not interested because I can't get a mortgage with that bank that'll do it. So, yeah, if you are going to buy to flip, work with the 6 months and plan. And go, well, I'm going to keep it for 6 months and market it. Rather than go, I'm going to do it, blitz it quickly and then get it on the market in 2 months. Because you say you're just going to restrict down who you can sell to. What
about if you're flipping and you're just a cash buyer?
Doesn't matter.
Then you can, because you hear a lot, obviously, like people do investments to people who are going, you know, somebody handles the flip, but they get private investments. So is that a way to work around that mortgage when you just buy it cash? It's
all about who you're selling to, and that 6 month things. Doesn't matter how you financed it to purchase the actual property to then do the work. The banks aren't interested. The mortgage lenders don't care about that. They just care that has the property been owned for 6 months.
Right. Okay.
Because it kind of goes back to, just because I worked in the market 2006, 2007, 2008, leading up to the global financial crash. And the blamed flipping, wrongly in my opinion, is ways of why the property market went bonkers. Because they've seen people literally months later making £20,000-30,000 in their house for doing next to nothing other than just owning property, because the values are rising so quickly. And the banks thought, well, what we'll do is we'll try and put a wee bit of a hold in to cool down everything. We're going to do it there. But also there's other checks in places as well, because money laundering's a massive thing. And using property as ways of laundering money is seen as quite an easy thing to do, and it shouldn't be. So that's why we've got our checks and the lawyers have got their checks to check where the money's coming from. So whenever lenders are looking at things like angel investors, they're going to go, well, hang on a minute, it's great that you've got Joe Bloggs going to give you 60 grand to buy a property. Where's he got his money from?
Yep.
Because these people will be looking for ways of trying to get the money into properties, because they'll put it in cash. They'll buy the property, then whenever they sell it, they get the money back out clean as a property transaction. So that's why there's all these wee rules in there to try and slow down everything, to make sure the checks are done to stop that from happening.
Right, okay. So it doesn't matter if you're cash or not?
If you're cash and buying the property, doesn't matter. You can do whatever you want to. But the thing is, if you're going to be buying a low value property, doing it up, you want to try and maximise what you can out of it. If someone comes along with cash and there's not the ability to put a closing date on it and try and drive that price up over housing value, it doesn't serve a purpose from an investor's point of view to sell to a cash buyer. You're wanting to get the most you possibly can, not someone comes along who's the only buyer who can buy your house right now.
Have you ever dealt with any clients in the past where they've came in and, you know, you've not been able to get them what they were looking for because of the structure in terms of buying property?
In terms of how the in terms of like how the property's been built over the years, or
like on the kind of property market, like for business.
Especially with where we are in Ayrshire as well, again across Scotland, because we've got clients across Scotland, there's a lot of wee pockets that the properties, so post-war there was a need for housing, soldiers coming back and things like that, there was a baby boom, and the local authorities had to build housing, and they used all these what's known as modern forms of construction, so like Doran's construction, Lindsay construction. So
I actually, before I bought Saltcoats, I went and viewed a Doran's construction home. It's on like just onto a road in Irvine. And I took my dad with me, and he was like, do not buy this property. And it was 100k, so I was like, well, I can't anyway. But it was cash only as well.
That's why.
But the property, you could have built 3 in the plot, like it was so big.
So even at that age you're thinking,
like I was thinking, knock that thing down and let's like build 3, but obviously it was out of marriage. But that was like that type of construction.
Well, that's one of those things, those type of properties, if you ask me honestly, would I buy a Doran's construction property or a non-standard? There's actually a list on the Scottish Government's website of what's known as defective housing, right? So there's some things like reinforced concrete and stuff like that, where if someone has got like retrospective structural reports, things, or there's been an upgrade work taken to fix things like the steel construction, yes, there's some banks can consider. But whenever you're looking at constructions which is cash only, that in my opinion is a terrible thing to buy. Because right now at 100k, you're thinking, well, I need to be cash to buy that. What happens if I buy that property and I do it all up and put a new kitchen in and all the rest of it, and all around me, all the housing values going up and everyone's benefiting from it? As time goes on, that property is going to get harder and harder to sell, especially if it has got things like steel beams and so on, because steel over time corrodes. And that's why these things aren't liked by banks, because they don't know how the structural integrity of that building. So that's why these properties are cheap and cheerful. Now, there are actually lenders that can lend on them. They're banks like Together who will do it. However, where you would probably get maybe a rate of 4 point something off the high street just now, you'd be looking at maybe 7 or 8% off them. Okay, so it's very expensive to finance, very expensive to do. The downside is there are all these wee pockets across Scotland, things like Doran's construction. So we financed one for a person in Oban, and we got that away with Halifax, but purely because it was a bungalow, not a house.
Right, okay.
A Doran construction bungalow. And they had, over the time, had got renovation work done
Right.
to try and treat a lot of the areas, because the seller knew that was a problem. But in order to sell that, not just a home report, the seller had to provide a full building structural survey on it as well. And my client wanted it purely because of the outlook. The scenery was amazing because of where it was, location, and he's like, it is like hen's teeth buying property here. Yeah. So I just need to go for it because I'm not getting anything else. It's really cheap. I'll buy it and it'll be somewhere where I'll raise my family for years. But I would go into that with big open eyes. Going,
oh, somebody actually bought it, within like a day. Like from when I went to view it, there was maybe like 4 or 5 people walking around. Yeah. And I was like, oh, my dad was just like, stop it. But somebody actually bought it, and then we were walking by like 2 weeks later, and I was with my partner and Chris, and we were like, let's just go in. Well, he was like, let's go in and speak to these people. So we went in, and there was a couple of builders there, and they were building away. But this was, about 18 months ago, and we walk by there regularly now, because it's near where we stay, and it's still like it's not really took off into a full renovation. Like, you sometimes see a work van there, sometimes you don't, but like, I just don't actually know if anything's happening with it. Yeah.
The thing is, it's just those type of constructions, especially the prefab stuff, were cheap and cheerful methods of housing. They were designed to be short-term fixes to a housing crisis, to allow the government's time to be able to build more structurally sound properties, which they did do. There's other areas which are now brick built, concrete brick, like some loads of bits like Castle Park and so on like that as well will be all standard construction now. But these other ones that they were cheap and cheerful post-war, they weren't designed to be still standing 80 years later, 90 years later. Whenever you're looking at trying to get a mortgage on, the bank's going to go, well, hang on, you're wanting to borrow how much over 30 years? But more important, whenever you come to sell that asset, you're going to be trying to sell to someone who's also going to need a mortgage, who also needs to finance over 25, 30 years. So that's why they're an issue, because of how long is this realistically going to be standing for? Surely
there should just be a thing where you can have it, but just knock it if you're planning to rebuild or something.
That's why they're cash buys.
Just buy the plot instead.
Yeah, that's it. That's why cash buys 100k. That's my plot. I'll just buy the house, knock it down, and I'll redo it. But again, every time I'm looking at property, I'm thinking of the resale. I suppose as a business owner, you always want to think of, well, I know it's going to cost me that, but what am I going to make out of it? What's a resale on it? And those type of properties, the reason why I'd avoid them is because I genuinely don't know what I could sell that for down the line. I
think one thing I've learned today and picked up on is it's, you're renovating for the resale, and you're thinking, well, I'll make this much from it. But that person that's buying it needs to have things in place to be able to buy it, such as a mortgage or lending. So you need to make sure that it's done right properly, so that they can actually get that loan. Doesn't matter if they've got a good credit rating, they can get the house, they need to be able to get the loan.
It's things like, you're waiting to start the project for building warrants and stuff, but it's amazing the amount of people that just crack on.
Well, I specifically phoned the council and said, can I start ripping this place out? And they said no. So I am patiently waiting. But when I had like the damp specialist ring, because I know there's damp issues, he kind of said, well, I can't really... You've got layers upon layers of, wall finish in here. It's been like timber cladded internally, then wallpapered over and plastered. And he's like, I can't actually get into
ripping things out
to the wall until you start ripping things out. And I was like, well, I can't. And I think for me, it's because it's not my own personal house as well. It's as a business move here. I'm just not willing to do something that's not kind of by the book.
Which is the right way of doing it, because again, it's an investment.
I just can't, so it's just patiently waiting for its building warrant.
And the thing is, there's people who do jump the gun with it, and they'll be the ones that probably find that they're going to lose money on it, because the council come back and go, take that back off, or change that, or whatever it is, as well. But more importantly, it's whenever they then come to sell the property, and then the solicitors are asking, right, where's all your paperwork? Go, I've not got it yet, or I'm still waiting on this, and things like that. And that's where flipping property can come in, especially if someone's doing mega structural things. You need to have the warrants, you need to have the consents, you need to have everything in place to be able to sell the property. And if you know the speed that council planning departments move at, it's not very quick.
Yeah.
You know, you need to, you know, you could be months and months.
I know, I think I was 12 weeks for the planning for change of use.
Right, just for change of use.
Just for change of use, which is why my timescales kind of just slowed down, because you had to get the change of use, then the building warrant.
And then apply for the warrant and stuff out
Yes,
the back off it. So again, how long is that going to take them in North Ayrshire?
Yeah, because as well, it's not just a simple, let's just knock this wall down, which they probably get every week. This is, no, we're actually making spaces here that people are going to live in, and they want to make sure that, because it's went from commercial to residential as well, we've had to, you know, get in touch with people in sound to make sure that the flat above's not being affected from below. So there's just more to it that's not, you know, just taking a wall down.
Yeah, so, definitely.
And it's not new for the council, but it'll be different for them getting, you know, a wee project like this in, so they should bump it up.
They should, absolutely, but also more importantly, the council need to get with it, because this is going to be and should be happening more. I think more landlords, more developers need to get involved with commercial to residential, because there's so much commercial stock available in a time where there's very little residential. Let's start converting some of these old sandstone properties back into flats for people to live in, because you see all the time in Glasgow. You know, and there's tenements everywhere like that, you know, that sort of thing's absolutely fine. And again, there's going to be certain things you're looking at from a retail point of view and go, well, that's not going to work. You know, it's too big or whatever it's going to be. But there's loads of small shops that you could quite easily convert in near enough every single town across Scotland from commercial to residential. But do it with a bit of experience. Do it where you can buy it not on expensive bridging, because if you think about timescales and if you're paying back expensive bridging costs every month, your hands are tied with the council's moving times, and then once you've got the warrant, you've then got to get the builders all geared up to do what they need to do. Your money could be tied up for months and months and months and months and months. And if you're paying high interest bridging finance, you really don't want to be doing that. So that's why it's not designed. What you're doing, I would say, is not for the first time investor. That's someone I would say is experienced, but which you are, thankfully, you know, and you can.
It's for a project like this, it's definitely like just knowing people who know, because it is a new experience. Even though I kind of know what's going on renovation wise, it's still been a new learning experience for me, the change of use. So just having people, you know, I've got a really good friend who's kind of doing something similar, and knowing the right people to speak to about it definitely helps. Because it is such a new, it's not something you see on social media a lot either, so it is very new, but up and coming.
But it is definitely up and coming. I completely agree with that. I just wish more of it was going on. But again, what you said, it was all about who you know. So get people like throwing themselves into like property, you know, networking groups and stuff like that as well. You know, that's where it's good. I
spoke to you, I think, before I bought it, to ask what the right, you know, strategy was here to actually get it, you know, in my hands. and certainly trying to do things the right way, because you don't want to make expensive mistakes down the line and then find out you maybe can't finance it or can't do this. And like all projects, cash flow's king, and the ability to be able to raise money on property, especially through renovations, is vital, because if something comes up, you need some cash. You want to be able to make sure you can, you know, get the cash out of the property. But things like you know, going to like property networking, things like that as well is good, because you'll get to meet different people who've got the same interests, maybe help you find the right type of property, to maybe help you renovate it, you know, maybe even help you sell it down the line with estate agency contacts. And I think it's the thing that I've been involved in property and doing this now for 21 years. Right. Scared to say that, actually. So I've kind of seen everything. I've seen the good markets, bad markets, global crashes, pandemics, everything that's affected the property sector. But year on year, property continues to grow. And that's the thing. It's all about buying in, and there's no right or wrong time to buy into property. It's always going to go up anyway.
You just need to get in on it. So I've got, as a key example, I've got a really good friend of mine and bought a rents a property in Finniston, in Glasgow, and has been there now since 2005. Right. Waiting patiently. He was ready to buy maybe by 2012, and says, I'm going to wait because the market's high in 2012. I'm going to wait for everything to come down. And still hasn't bought. And now can afford to not buy.
Yeah.
Or, you can't afford to buy anywhere because it's just risen and risen and risen all around them as times went on. So whenever I say to people go, when's the right time to buy? Today.
Yeah, that's so true. It's even it's not really related, but we were talking about getting our garden done this week, and I was like, but it's always going to go up.
Yeah.
So let's just do it. It's never going to get cheaper. Yeah. So why don't we just get it done now?
Cost of materials goes up, cost of labour goes up.
Which is why house prices go up, because then people are spending that on their houses.
And they go, I want this back out of it, where it goes there. So so again, the right times now, as long as you can afford to do it. Mm-hmm. And the thing is, with property isn't a short-term way of making money.
Yeah, exactly. It's
gotta be in it for the while. Flipping's okay, but again, if you're doing flips in your personal name, for example, you're going to get hit with taxes, capital gains tax.
And then because flipping is sort of the quicker way, it's a bit more, you might be battling with somebody for the property, because there's other people wanting to flip and do a quick fix.
Yeah, exactly.
Whereas because rentals is a longer game, you've got a bit more, there's less people
you want
chasing.
That little nugget that's sitting in Rightmove that's been on the market for 3-4 months. It looks really tired, really dated, cracked rendering at the front, roof needs a bit of work. That's the sort of stuff to look at buying. But I've got a good client that goes out and turns 1-bed flats into 2-bed flats. Yeah.
Just adds that bedroom in for
adds
value.
Extra bedroom in. He goes in, we can do this, buys the thing, converts it, then we refinance it 6 months down the line, pull the money out off it. He then goes and buys the next one. Yeah.
I think when you're in the property game as well, getting started, you're trying to build up your assets and your finance. Yeah. But once you can do that, then you can be a bit more creative and say, well, I like changing 1 beds into 2 beds. Yeah. Or, I like to do this type of thing. Or maybe you just like to be in, out, flip. There's so many different... Because you need to enjoy it as well if it's a long game, so you just need to start and then find out what works for you.
But also from an investment thing with property, because there's so many ways to invest in property and things you can do. You can do your flips, you can do your commercial to residential, you can do your normal buy-to-let income. But we're seeing a massive rise in short-term lets as well. Yes. So holiday lets, and again, people would need to renovate them because they're going to want to make it more like a hotel almost, away from home. Even though it's a normal house, they'll stage it in certain ways, and that's where that can be quite good. But holiday lets are a brilliant way of making money. Yeah. As an investor, in Ayrshire, for example, a cracking firm called Danini, they specialise in looking after people's properties. Yeah. And you'll give them a flat, and they'll take care of all the renting out of it. All the maintenance they'll do with all the Airbnb hosts, all the rest of it. Because people think, I'm not at the seaside. Yeah. Why would people want to come and stay at my place for a couple of nights? I'm not in a touristy area. You don't need to be in a touristy area to do short-term lets. You've got lots of things. You could have a workforce up here, for example, building wind farms who may be on a 6-month contract. Yeah. They'll need somewhere to maybe put 2 or 3 fellas in. Staying in a hotel is going to cost them a fortune. But if they could take that property that you would normally rent out for maybe $650, $700 a month, but you can go, well, hang on, we're going to do this as a short-term let. We're going to put broadband in. We'll put, it'll be more like a home away from home for the guys, but it's £2,000 a month. Yeah. Companies will pay that to house their staff. Yeah.
And on that, so I've thought about that as well for my Soul Coats one, but I don't know if I'm a bit hesitant. I feel like I just want to get the renovation started first, and then I'll maybe have a bit of headspace to learn about it. But on the contractors, my partner works away, and he has always said hotels are crap because you can't make your dinner when you finish work. You have to go out, and you're tired, you've been labouring all day, it costs a fortune. What the guys want is home away from home, where they can go and do a food shop for the week, and then they can go to their bed and watch telly at night.
Because a lot of the guys will be getting subsistence money, money to pay for food and stuff. If they're in a hotel, you're subject to paying 20-30 quid a night or whatever, getting dinner and a couple of drinks or whatever you're allowed to get. Whereas if you could go, well, hang on a minute, and the hotel is going to be, so for example, £2,000 a month sounds mental to pay that for a 3-bedroom ex-council house and rent, but you get that in the short term let to someone like that because it's £500 a week. Yeah. So it's £100 a night, Monday to Friday for that. So it's cheaper probably than the hotel. And again, with subsistence allowances and stuff like that as well, people can go to Tesco or Asda, buy their own food, then come in at night, chuck their clothes in the washing machine.
Yeah, animal.
Sit and chill out, watch TV. They can sign with their Netflix account and TV. They've got broadband. You know, they can bring a PlayStation up with them and do what they want to do. They can treat it like a home away from home. So we've seen like a lot of clients now starting to move into these sort of short-term lets, Airbnb, serviced accommodations, and it's a really good way of making some, you know, solid income or money. But again, if someone wants to do it and manage it themselves, they can do. But say there's loads of companies out there that will do it and take ownership of that. Yes, you'll pay them money, but you'll make a lot more money from the figures.
Yeah, you're still going to make. It depends on, you know, again, if you go down the serviced accommodation route and you want to do it on your own, like, then you need to be prepared to deal with you're not just dealing with property, you're dealing with people and providing. You're more of a service provider,
cleaning fees and things like that.
You need to. It's more like booking systems. You know, are you going to answer that phone call if somebody phones you and says, you know, the key's not there or something like that? So that's more of a. I probably would pass that on to a management company. For what it's worth. Yeah,
and again, it's one of those things there, because it does come, it sounds good just as some risk things to factor in for people looking at serviced accommodation. I'll use Edinburgh and Glasgow as an example. You know, Edinburgh a few years back was just full of flats rented out for Airbnb. You know, you were getting it for £100 a night compared to going to a hotel and paying 2-3 times that to stay in, you know, central Edinburgh. But all the local people that lived in those flats, the flats were usually like party pads. People come home at like 2-3 o'clock in the morning having a party, you know. So if you imagine living near that, it's not a very nice place to live. So they went to the councils, kicked up in their stink about it, and the council changed all the planning regulation around short-term lets. So you've got to have like things like your own front and back door now, which in a lot of block of flats you can't. So again, rules and regulations can change with property. So you need to make sure if you are going to be buying things that you speak to maybe the local council and go, well, what do I need to do to be able to get this? Because you've got to put up notices nearby now to say to people, this is going to be used as short-term lets. If you have any complaints, please speak to North or South Ayrshire Council before we actually do it. And yeah, you want to make sure that, you know, you definitely do your research before you buy one of these properties as well, because it can all be fine and well, but as I say, Edinburgh's done that, Glasgow's process of doing it. You know, how long is it going to be before other local authorities start going, well, hang on, we're going to make sure that if people are renting flats, we want them to have their own main door access now. We don't want them to be on shared access. And then if you've bought and built a portfolio based on that, then overnight gets taken off you.
Yeah, I think with the short-term lets, it looks more attractive because you design them and renovate them different. Like you take it a wee bit, you know, a step level, because you're designing an experience. So it seems more trendy that way. But actually, like, there's so many other loopholes, and that's, you know, even though I would love to do my Saltcoats one as the apart hotel, so I could design it that way. There's other stuff involved there that I've no experience in with the short term let. So I'm like, I need to, you know, I've still got other projects that I need to deal with. So. Yeah.
But that's the thing, but there is a market, and there's certainly people out there that are taking these properties off people now because they are getting popular and going, look, we'll handle it all, we'll take a percentage of what you're making, we'll deal with the lots, you don't need to. So, which again can be quite a good way of, you know, making money. But again, it's creating more jobs and more things in property industry, you know, which
and
is
you're
needed,
bringing people into the area as well, so
absolutely. So it's great for tourism. If you look at the sort of net tourism cost these properties are bringing into, especially into Ayrshire, you know, you've got so much going on, you know, things like air shows and things like that, you know, music festivals, the open golf's massive. So you're buying properties, you know, in Prestwick and Troon for things like Airbnb. You've got Prestwick Airport that's there, you know, pilots off duty, you know, what to stay maybe in. Got 2 days and a changeover, for example. What we're going to do, go into a hotel and spend this, or maybe do a wee Airbnb for a couple of nights and get my own place to do what I want to do for half the cost. I know where I'd rather be. I actually genuinely look in Airbnb first of all before we go on anywhere else.
We are going on holiday next month. We're going to Ibiza, and we've booked an Airbnb, like a villa, because there's like 3 of us going, so me, Chris and his friend, and I was like, I just want to have my own kitchen and things. Like I don't want to go out every single morning. Like sometimes I just want to be able to make something in the house. But now we've got our own private pool and everything, because and it's literally the same price as what a hotel would have been.
Aye, and you get to cook your own food and not have to stand in a massive buffet line.
I obviously like going out, but like sometimes I just want something simple that I can make, you know, in the house or in the villa, should I say. But I look in Airbnb now, even going away with like a group of friends, because you don't want to go out into individual rooms, you want to be there, you know, you go there together, so you want to stay together.
Absolutely, yeah. And as long as you've got someone who can cook in a group, that helps. So.
Amazing. Well, this has been fantastic. I'm sure everybody's going to find so much value from today. So what we'll do is we'll link Iain's details in the show notes, so if you want to check out his socials, how we could maybe help you in your own mortgage or property business, then definitely check them out. And we would just like to give a big thank you again to our sponsor, the Garage Conversion Company, for making this episode possible, and we'll see you in the next one.